In this video, I'm going to give you an all-access backstage pass into the process I go through when I sell options every day. I'm going to share with you the entire process I went through today when I sold a cash care put option in a company I'm about to share with you. This will help you see the process I've gone through the past 20 plus years to be a successful option trader. Instead of sharing the entire hour, 2-hour process with you, I'm going to give you just the cliff notes, just the good stuff. So let's get started. First, I'm going to slide my screen over here for you because I want to share something with you. When I'm looking for potential option trades to make every day, the first thing I want to try and do is avoid earnings. Now, currently I'm tracking about 250 stocks and ETFs I'm willing to sell options in. And what I do is I sort them by the next earnings day. Typically, when the third Friday of the month is less than 20 days away, I begin to look to sell options in the following month, whose options tend to be around 50 to 60 days out. That means they're options that will expire in about 2 months from now. I am willing to sell options that expire as low as around 20 days, but preferably, I like selling 40 to 60 day options. That gives me nice premium, but gives me the opportunity to close those positions out early to improve my return. So you see I've sorted the column of about 250 stocks and ETFs that I'll trade options in by next earnings day. I then scroll down to the date that's just passed when the options expire. You see, I want to sell options in companies that are announcing earnings after the option expiration cycle that I'm going to sell. As you see here, the expiration I'm going to focus on today is the one that expires in about 45 days on November 15th. So what positions can we find to sell some options in that'll put some nice premium in our pocket, some nice cash flow, but let us avoid being in this position through earnings? Well, here's what I do. I begin to look at all the companies that are announcing earnings after that November expiration. So in this case here, I will start with HPQ. So what am I looking for? Well, the first thing I'm looking for is companies that are not overvalued. You see, I only want to trade in companies that are either fairly valued or even better, companies I believe are undervalued. For example, here's a company that I really like. I like ADI. I think it's a great company. It's consistently profitable. The problem is that it's trading at a very expensive valuation. In my opinion, it's way overvalued. So even if the technical setup was perfect, I wouldn't trade an option in it because I believe it's very overvalued. However, I will trade in companies I believe are fairly valued, or even better, as I mentioned earlier, undervalued. Those are the ones I really like. So what can we find as we go through these stocks that are not announcing earnings till after our expiration cycle, after the third Friday of November? Well, let's look. Now, here's a company I've made a lot of money on over the years, MDT. And in my opinion, it's not overvalued. It's fairly valued to even possibly slightly undervalued. So it's definitely one that I trade in. So why didn't I place a trade in this company? Well, look at where it's at technically. See, although I don't want to trade in overvalued companies, I also want the technical setups to be good, especially if I'm selling options in them. Notice what's happened to MDT from a technical standpoint over the past few months. You can see it better on this bottom right chart, which is our weekly chart. I'm going to zoom in for you here. So the stock came down and made a new lower low, as you can see here. You see the low back here at the end of 2022, and then went up, but then came back down here at the end of 2023. That low there from that wave was lower than this wave. That meant that it was in a downtrend on this weekly chart. Now, I'm not saying I wouldn't trade in it if that's the case, but you just want to keep that in mind because there are multiple time frames I look at when I'm entering an option trade. But what I like is that it then reversed course. Notice what happened over the next year. So although it reached a recent lower low back at the end of 2023, notice what happened over the next several months. Over the next 9 months or so, it made a nice new higher low. That looked good. What about a higher high? We have a higher low. If we get a higher high, then we have a confirmed reversal of downtrend. Here we see the previous wave's high back in February of 24. Notice that recently, over the past couple of months, it's made a nice new higher high. In fact, it's done that just over the past month and a half. So that looks good. MDT appears to have reversed course. So why not place a trade in it today? Now let's go into our smaller time frames. This bottom right was the weekly chart. Let's now look at the daily chart. What does MDT look like on a daily chart? Here's what I don't really care to see. You see, what's happened is that it's made a nice advance, which is great if you're bullish. If you own the stock, that's great. But it's advanced 17% over the past several months. That in itself is not a problem. I have no problem with that. The problem I have is that it's quite possible that it will come down and test this area right in here for support. The area is around $86, $87 per share. But what I'm concerned with even more is what might happen on the weekly chart. Let's take a look. Notice it's finding resistance along this red 200 moving average on this weekly chart. And that's what we expect. We generally expect moving averages to serve as resistance for stocks, and that's exactly what's happening with MDT. So it's quite possible that if it can't break through this resistance and make a new high here, that it very well may come down and test some areas down here for support. Now I've drawn this upward sloping trading channel for you. Notice that if MDT cannot push through this area, that's been serving as resistance for it for about a month and a half, so it's quite possible it most likely will come back down to here and test this area for support. If that fails, it may end up all the way at the bottom of this upward sloping trading channel, and I put it way down here on $80 per share. You see, I don't want to sell a cash or put option in a company that has the potential to decline around 10%. So although I love the company, and I think it's fairly to possibly even undervalued, the technicals don't line up in my favor here. Now let's look at the technicals of a trade I did today. Here you see 4 time frame charts of the Kroger company, ticker symbol KR. We're going to focus on these 3 time frames. The top right is the hourly, the bottom left is the daily, and the bottom right is the weekly chart. Why do I feel comfortable selling cash or put options against the Kroger company? Now keep in mind, this trade very well may go against us. But I'm going to tell you why I felt comfortable doing this trade today, then you can see how it plays out along with me. First, focusing here on the top right chart, the hourly chart. Notice what's happened over the past month or so in the Kroger company. It's been finding nice support around this green 50 moving average. And I expect if that were to fail, it would find support around this red tuna moving average on this shorter time frame chart, this hourly chart. That's the least important chart to me when I'm entering a longer term cash or put option, or an option that expires in about 40 to 60 days. Let's now look at the more important time frames in my mind. Now here we see the Kroger company in the bottom left chart. This is the daily chart. The one thing I want to point out to you is that I did have some hesitation with placing this cash or put option because of the technicals, and here's why. Notice I've also drawn this trading channel for the Kroger company. Notice it's overall in a nice uptrend on this daily chart. The problem is that it's in the upper portion of this upward sloping trading channel. Ideally, I'd love for it to be down here in the bottom portion of this upward sloping trading channel, but it's not there. So why do I feel comfortable doing this trade? Notice what's happened over the past several days. Now first, I want to point out to you this area of resistance right in here around this $55 area. Notice it served as resistance right in here. Notice as I go back in time, it served as support and resistance way back here to earlier this year. So a nice area of clearly defined support and resistance for the Kroger company. Here we see it push through that area of resistance back on September 12th. It took a lot of volume to get through there. In fact, one of the highest volume days we've seen of the recent history. But with that nice big green candle, it pushed through that resistance. And then it followed through the next day with another nice green candle on nice above average volume over the past 50 volume bars. And then continued up one more day before coming back down to retest the area it had just broken through for support. You see, that's what stocks tend to like to do. If they have an area of resistance, if they push through those areas, they then tend to come back down and test them for support. It's kind of like testing the waters if you're going swimming in the ocean. If you think it might be cold, you just kind of stick a toe in, and that's what the market's doing. It's testing to see if this was indeed a good support area. As you see here, it was. Over the past 2 weeks, the Kroger company has continued to go up. Notice what happened when it reached that resistance area from the 16th of September. You see, about a week ago, it paused. Again, it was testing to see if it had enough strength to push through that area of resistance. In fact, it declined on September 26th. Then the next day, that whole candle reversed and it engulfed the whole previous day's red candle or down candle. Then yesterday, it pushed that area on nice volume as you see down here. So overall, I like that it came down, found support right at this $55 area. And as a result, over the past week or so, I've been selling cash or put options against the Kroger company. And I'll show you my entire position here in just a minute. Now looking over here, our final time frame I like to look at when I sell options, notice the weekly chart. And we just see here that it had a really nice high volume green candle, huge candle here that showed buyers were definitely in control. Sellers tried to take control the next week, but they failed. The week after, which was last week, buyers were back in control. And so far this week, buyers are still in control. So we have a company that I believe is slightly undervalued. It's a solid company. It's a grocery store company. It's not supposed to announce earnings until December 5th, which is after the expiration of the options that we sold. So overall, this is the setup for me. Now I'm going to tell you there is no perfect setup. Very seldom do I see things that are just everything lines up perfectly, but you make the best decision you can based on what the market's telling you. So here's the trade I did today based on what the market was telling me. I sold the KR November 15th, $55 cash or put options. For that, I got $1.01 per share. Here you see my overall cash or put option position that I'm in with KR. That option I sold just a few minutes ago that I showed you, that's the last put option I'm going to sell in KR. You see, my rule when it comes to position sizing is I want to have at most 5% of my overall portfolio if all the options were assigned to me against any individual stock that I've sold options in. In this case, it's the Kroger company, ticker symbol KR. Over the past week, I've been building this position, and now I'm at about a 2.5% to 3% position size. So if all these put options I've sold were assigned to me, it would be equal to about 2.5% to 3% of my overall portfolio. Now my rule is that I'll have at most 5% in any one position. But what this does, it leaves me around 2.5% to 3% left to repair this position if it goes against me. So here you see my overall position. I sold some of the $50 put options because I wanted a safer play before the Kroger company began to take off over the past several days. So what do you think? Was this a good trade? Well, time will tell. In fact, we'll find out here in about 45 days, you see here. And if possible, I'm going to close the position out to improve the return. Selling cash carry put options and cover calls is one of my favorite ways to generate easy cash flow every month. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you'd like to see some of my favorite tips and tricks that I've developed over the past 20 plus years of trading in stocks and options, check out the video series at the link above in the description below entitled Trade Options Like a Pro. Until next time, happy investing, and we'll see you again soon.